Welcome to the Breakfast Club. My name is Darren Hancock, and this is the ThetaWave Trader. We are here on the 20th of August, 2024, on a Tuesday, looking for a reversal pattern to start happening Tuesday, Wednesday. So just keeping our eyes on the daily for a little reversal back into the range created since Friday. So if we just keep it heading north, that's fine. That's fine too. And I apologize for yesterday and having that long audio at the end. I edited it out, and that's why there's a copy up there on the channel. I didn't know my mic was still open and I was still live. So that's all been edited out. Thank you very much to Shepard for sticking around, letting me know that. It wasn't until I came in here, started getting on the phone and realized, what's that echoing sound? Realized, eek, I'm in front of my camera still. Anyway, let's have a look at what's coming up here for bias in terms of bias. Regular trading hours are starting here. Electronic hours, they've pretty much come through since the regular trading hours ended. We've pretty much got a nice little return back to that regular trading hours, how it ended yesterday. So we might have a small gap here to come back and fill or going lower. I do like this candle right here. Looking at this candle here. For us to come back into that. And then I'm looking at this area here. This is no inversion. Oh, sorry, it's 1 hour. That's the 1 hour inversion. Make sure that it's attached to where it's supposed to be. And then this here is, we have a up. We have a swing high. It's taken out with this candle here. So I'd like to see if we do maybe I don't want to put that whole one on there, standby. Let's just go here. Got the wrong. That's good. Keep on driving. So far I'm in profit in this one, so I have to lock in some profits here. I got in on this trade just before it dropped lower, and I want to make sure that I lock in some profits here. Okay, so we're looking at this fair value gap below us here. Sorry, I'm kind of watching this level here. I'm looking for this consequent encroachment. I'll take some profits there. And we could do the classic 50, 62%. If it runs through the consequent encroachment here, then I'll just use this this tool here to scale out the trade. I'm in right at 19,847. Right at this the return back into this here. I wanted that one, but I've got this one. So let's look at, so we've got downside here. We've got pockets of liquidity. This down below us here. We've got these relative equal lows here. And let's look at the daily. Daily, I'm looking at this down here as a potential objective. Sold high. And this imbalance down here. If we get a full run all the way back down, look for this imbalance below us here on the day. So you have that midpoint of the hourly. And then we have return to this old high. 62% will put us right on top of this old high here. And optimum trade entry would be right back inside that imbalance for the day. We also have this small little imbalance sitting up here. I think it was the daily. This little imbalance here that we didn't quite fill. Pull up a little short on that. And then start going lower. So I do like the idea of returning to this old high here. Or 50% of that hourly. And I think we're pretty close to the hourly now. You know, yeah, we're getting there. Okay. Let's look for Bitcoin. So you've got two different directions in the NASDAQ, further downside. And that range as I was looking at, here's a nice reversal in Bitcoin. I'm going to jump around, give you a bunch of them different ones here. So we have a dip below right here, return back into that order block inversion. The moment we drop below it, and you need to zoom in on this so you guys can see. See how it dropped below right here? That's my signal that we're going lower. So we got on the other side of it. See how we hit it multiple times? Bodies respected it, then it dropped through, gave you the hit that guess what? I'm going south. Pops back up into the consequent encroachment of the BISI, inversion, continues going lower. We want to see this candle get taken out on the downside and then a return to it. So we get this down candle, takes that candle out. We return all the way back up inside it to the bottom of that inversion again, one time, and continue going lower. So always keeping in mind the next low below you is where liquidity pool is sitting, from here to here, then here, and then you get the big pool below you. So all the time that we take out new lows, if a fair value gap forms in this side, keep your eye on it. If we break it to the upside in a close, then there's your swing with the reversal. And let's look at this soybeans. I think yesterday we were calling it down still. We got yesterday down. Let me get rid of all these up here. Where's the weekly headed? There's your drawn liquidity there for weekly. So we could get a retracement back into here, this fair value gap, before going lower on the daily. So keep an eye on potentially further upside. And then you're looking for kind of just that area is your peak. And then the weekly objective. I think the weekly objective is, so right now we're coming back into this range. So if we do come back to this fair value gap, look for the low, consequent encroachment, and the high. And if we break through that, then we've got further, seek further to upside, maybe 101, 2.4, that old low back there. As far as wheat futures are concerned, we've still got the sell side liquidity we're looking for here. We have relative equal highs above us here, and we've got this little cluster. It's getting smaller, compressing, so it looks like it's going to reach for these lows down here before running back to take those highs. So if you see a significant drop down, creating a fair value gap here over the next few days, and we start to push back up, you look for this liquidity resting above the market here. We're looking for this level here in sugar, and we hit that yesterday or this morning, I would imagine. That was the sell side liquidity, and we hit that. This must have been a box I drew a while ago. We didn't reach. Yeah, back in July, I was looking for it to get down here. Never reached it. We still haven't taken that high out. We have imbalance here. And now we're trading above the imbalance. So this is getting a little more of a lift, looking for these equal highs, relative equal highs. Wait for the relative equal highs to get taken out, and then there's all this liquidity below market here. And then keep your eye on that box. So we'll keep that box still in play. That'll be the drawn liquidity once we take these highs out, I think. Buy side's been taken. And we're looking for this level down here. Return back to liquidity. Cam model 1 entry. We're looking for this to go higher. Yesterday we were looking for it to return back up, give us this kind of setup, and so far that's working out. See where today ends up. Keep your eyes on these levels.
Order filled.
That just came back, took my stop loss. It's good. I like being up for the day. Lumber, still looking for buy side liquidity, and lean hogs, sell side liquidity. Gold, forever pushing higher. Nice. That's a really nice. See how we break above these highs, and we come back, tap the highs, and then start marching higher. So more upside for gold until we break this fair value gap here and that candle on the downside. I'm still bullish on gold. Copper's been on this really nice little climb up. That's hourly. Let's look at the daily. Copper is reaching these equal highs up here. See how it acts here, whether or not we continue to find a nice bold candle above this and use this candle as support. Come back, find some support at it, and continue pushing higher. That's the key candle right there for me for copper. And that little fun one we saw back in July is still pressing higher. And what's this here? Did I give this an upside objective for where did I see that one? I will amend my original idea. See what kind of how we see it, that level react. Not that I know what ISRG surgical instruments are. All right, let's get back to here, and I wouldn't mind showing you guys a little bit about I do like this level here right now, though. My eye's going to this level right here. I'd like to see us come back and retap that. Before going lower. But we'll see what the range sets up for 9:30. I'm only with you for an hour today. I gotta go see my doctor. So I will see you guys. We're live here. We are. We've got 19 people this morning. Good morning, everybody. 23 people. Woohoo. Welcome, welcome. So I'd like to see us return to here because I got that. I'm still looking for more downside for NQ. This is our regular trading hours. So what's the difference between these two? Regular trading hours. So 985 are from here down here. So this will all be open range or the regular trading hour gap. I'll be looking for it to come back into. So if our regular trading hour start was 854, I'll put it in here so you guys can see it. You see it for the same levels I've got. 854. And the electronic trading hours. We're now at 814. This will be the opening range gap. See how we came back to that level I was looking for right there? That imbalance, small little imbalance, you want to see it hold it and then continue going lower. If we trade above it, look for this candle here. If we trade above that, look for a run back into this range here. This candle becomes important to me if we lose this level. Otherwise, we still got downside. We're still looking at that 19719 level. There's a lot of draw on the downside right now. We got fair value gaps down there. We got new day opening gaps, new week opening gaps. We got some heavy draw down there. Big magnets pulling price down. Heidi, good morning. Curryfish, how's it going? Derek, good morning. How are you, buddy? I hope things have been well for you. We are away for a few days and I'm just now back in the seat. Good to see you, bright-eyed, bushy-tailed, and refreshed. Thank you, my friend. Thank you. Yes, I am. But I'm heading back to the doctors today because I'm getting a little couple of heart palpitations going on, so I want to get them checked out. I think it's because of the muscle relaxers I've been taking. I've had some problems with my back. You know, surgeries are great for the interim. They get you mobile again, but you have to live with constant pain. So muscles are tensing up all the time. It's, maybe you guys won't want to hear that. But it's been interesting. It's been fun. I've really enjoyed the old family coming out from England. We had a great time. My parents are still here. And yeah, I had an awesome time with them. Pablo, good morning. Takwi and Fernando. Good morning, Fernando. Yeah, I'm only here for another half hour, then I got to take off. Fortunately, my doctor's a 2-hour drive. So back in the old town I used to live in, the doctors they're not taking new patients all the time. So you got to kind of keep the ones you got. So my one's like 2 hours away where I used to work. It's okay. It's a day trip. 2 hours there, an hour, 2 hours back. That's my day. So you got a couple of minutes left here. We have relative equal highs above us here. Where this is all jagged. We're looking for to see whether or not this takes these highs out first before going lower, or just drive straight down. We have no news except for the Canadians, the CADs today. They're giving us a bit of CPI numbers this morning for CAD. And then we'll wait for the range to open up and we'll get some, we'll be patient. We'll say what liquidity would they be seeking for. Now we're making all this jagged down here. We have liquidity here, back into this range. But I want to see this imbalance get taken into the upside. That candle's make threshold to be taken, and then eventually use this candle as support to go higher if we're coming back into that range. So there's the 930. Look for this liquidity here. That's the imbalance. And a small reminder to you folks this morning, Michael will be on at good morning, Abs. How you doing, buddy? Michael will be on at 9:15. There's the highs taken. Now look for further run back up into here. This fair value gap, old low. Now, do we come back, find a little bit of support off of this candle here and start pushing higher, or just keep driving through this fair value gap here? There's that old low. There's the fair value gap, and running for liquidity above the market. There's the fill of the fair value gap, back to the breaker. Last up close candle before running these old lows into that breaker. Now, does it just kick us off and we start running back down? Just kind of study price action to see how it plays out. Kind of start talking when you're getting into that habit of reading it. Say, this is what I want to see it do. And see if it continues to follow what it is that you want it to do. I think one of the guys was asking me yesterday about when do you stay in price action and how long do you hold for? And I think you have to kind of decide, and I still have problems with the holding onto it, is when does it fail? And you got to trust that you're going to ride it till you see it fail when you think it fails at this point. And if it fails at that point, take the profits or loss that you've got in on. Obviously, you'll be in more profits if you're riding it still, and you're trailing your stop loss accordingly. But kind of keep an eye on where you see it's going to fail. So in other words, I was saying, if it breaks above here, then I know I'm going higher. So if I was going short, that would be the fail point for me. If you see it drive through that and start taking these highs, then you go, and it's a news release. So you wouldn't, or not news release, well, not ours anyway, in NASDAQ. It's right before the opening, so it tends to make a big move at the beginning of the opening. So you want to wait for the opening range to set itself up. But for me, if you were thinking about going lower, and that was the area right there, if we close that above that, and that candle's high, taking these ones out with a bold candle, not just a quick run on liquidity, continue going lower. You see it close above, we're going higher. That's where it fails for me. So you'd have to say, if my stop loss was here, you see it close above that, would have just ran straight up, took your stop loss. So now this is interesting. We've traded through here. So that 1 hour consequent encroachment. Remember we're talking about the hourly consequent encroachment of this fair value gap here. Right close to it. Didn't quite tap it. Tad bit short. That's kind of like Michael says, when it comes down, it just holds short of it and then reverses and goes back up again. He may look at that as a level of it doesn't quite get it. And I'm not sure, he might have a reason for it not absolutely not touching that consequent encroachment and then just driving straight back up. Now, I'm looking at this level here. Remember, and that candle right there. Right back to the consequent or the mean threshold of that candle. Breaker right there. We have a run above and this swing here. This is the last down close candle in that swing, taking that high, return to it here. So do we get support at this now and reverse? So in the 1 minute, you're looking for that high's taken. We're back inside this fair value gap. It's now been filled. That breaker has now been hit. So what you'd like to see is a reversal pattern starting to happen here. So if you went down it, sorry, I'm in the wrong. I'm showing you on my trading one here. Let me start this again. So you see how we filled this fair value gap right here to the pip. And there's the breaker right there. Return to it, kicking off of it, clean these old highs. These old highs, we've ran for liquidity above the market. We got a little imbalance forming here. That'll become an area of interest for me. And this is also an area of interest. We ran above here. So if this was that big old swing and you're looking for these opportunities, like right here, we set up a body that trades above it, you come back into it right there to go higher. It would be your indication to go higher. We didn't get back to here, so look for this one. Then you look for the next one, which is right there, just shy of it here. This fair value gap here, trade it above it, tap it again, go above. Then that breaker becomes important, or that old high. We come back and find support at it, start pushing through. There's a little tiny imbalance sitting here now. So if we close below this, like we just did, came back and tapped it right there. I want to see this provide support now, start coming back down. If this takes this high, we run through here, look for support off the top of this to go higher. Otherwise, this fair value gap and that breaker interesting. See if that provides support here. Went to see live golf in West Virginia over the weekend. Amazing and so much fun. Would definitely recommend it. Ooh, live golf. That's the PGA. Is that where you went to? That would be exciting to watch those guys. They're like masters at the club. That for me would be like, that for you would be like watching Tony Robbins do NLP for me. Watching these masters with a golf club. Thanks. Yeah. I'm not too concerned about it. I think it's the muscle relaxers. They just got my heart racing again last night. So that's what made me think it was probably the Robaxacet. So still waiting for this opening range to set itself up. So if we go back to regular trading hours, there's the gap. put it as a, keep your eye on the 50% of that. So I'm looking for that liquidity on the electronics right now. So I'm looking for this one on liquidity above the market here. Taking out this liquidity. This breaker, that breaker's gone. They traded through that. And they're running for all this liquidity above the market here. There's a big pool of it here. And you have equal highs here. There's whole pockets of liquidity above us here. This one. Make this jagged now. And you've got these, well, certainly more, that's a high resistance. Minute. So you got liquidity here and here. We've got equal highs here. We've now broken this one here. So on a 15-minute setup, looking for more highs. I'd like to see this candle here get taken for the upside. Find some support at this and keep pushing higher. I like the idea of this coming back into this 15-minute fair value gap here. Keep my eyes on that one. Keep your eye there. We'll see how we react off of that. We've got like array to like array. So that's my target right there. Got to be able to switch up your opinion. We're looking for this consequent encroachment. Didn't quite make the consequent encroachment on the hourly. I think we did. Stand by. That was 50% there. Oh yeah, we're more than consequent encroachment on that fair value gap. But the hourly busy, we didn't quite make the full run on that. But I do like this reversal. Now that we've taken these old lows out, we've come back to an area of interest. We've got a swing pattern forming here. We ran up. We did not come back down into the swing. So we look for this area of interest here. We've now traded above this. If we can find some support at that and start pushing higher, that would be even better. So keep your eye on this one for the next 15 minutes. If we come back into this in 15 minutes, I'll be gone in the next 10 or so, but keep your eye on that 15-minute upside objective. Where we at, going up to 18,903. Yeah, I agree. Definitely an area of interest. Hey, Abs. Come on up. Yep, we hit that first objective there. Just need this to close out and I'm done for the day. Make a bit of profit, $259.59. I'm going to move my stop loss there. Done. Yes. We got it, Abs. I took a run up to here and I'm out. So that's my profit for the day. So you're looking for this to now provide a level of support. This breaker here. I'd like to see a body trade above this and continue pushing higher today. Watch how it reacts in here. If we get on top of that, start looking for higher prices. You want to see it close above that. That's marching now, good. And that's the opening range. If we take that high out at 10 o'clock, then look for another return back into the range here. I could see this. Remember Michael was talking about those weeks where you have the Jackson Hole, where they do the seek and destroy. That would be a seek and destroy for a run for here, and then a run back down here for the morning. That's a nice little haul for me this morning, so I'm not going to push my luck. That was fun calling that. I'm going to get ready and head off to work, off to see my doctor. Thanks for tuning in. Sorry, it was only 1 hour this morning, guys. But that's my call for a run up above here. And if we find this to provide a level of support, then look for further higher prices. But what I'd like to see is this run above here, create this fair value gap in here, trade below it, and use this if we get a fair value gap in here, or this as a level of support to continue running back down into that key level again. Abs. You want to see it come back down into here. And then take this low out and hopefully come back into this. So that's where I'm looking for a run above here and then a run back down into this fair value gap here. If we use this for support, look for it to go higher. And then look for that breaker right here as a form of support confirmation to go higher. If we trade above that with a full body candle, that high with a full body, come back and use this as support, and we just wick down and tap this to go higher, then those are your confirmations. That's what I'm looking at. I'll be watching that on my phone throughout the rest of the morning. So I hope you guys do well. Be safe out there, and make sure you keep your leverage low. It's a crazy market out there. And I will see you guys bright eyed bushy tail tomorrow. Thanks again for tuning in. And this time I will try and make sure that my sound is turned off. So thanks again, guys.